everybody, welcome back to another exciting episode of the Breaking Bitcoin Market Update brought to you by Kraken Cryptocurrency. Hopefully everybody is doing absolutely fantastic on this lovely Wednesday, 2 days after Memorial Day and the last day of May. We have made it past the sell in May and walk away month as of tomorrow, where we can kind of cruise into a nice official summer of the cryptocurrency markets with June 1st. So I hope everybody's excited about that. I hope everybody so far has had a good week of trading. I hope that you have been following your strategies. I hope that you have been implementing and practicing effective and sound risk management. I hope that you have been diversifying your cryptocurrency portfolios, keeping up with the latest trends, and all of the above. That's what we're going to do on this channel. We're going to do some exciting live trading. We're going to break down and analyze where we see the cryptocurrency markets moving in the short term and in the near term. No, in the short term and in the long term. We will be taking your chart requests. We'll be answering questions. And overall, we will be together on this mission to conquer the cryptocurrency markets together, to crack the code on profitable cryptocurrency trading and investment. Before we begin, if you want to support the stream, you can do so on whatever platform you're on by subscribing, liking, and sharing the content. Show your friends, show your family members, show people you don't even like. We need to get those views in. This information is important, and I know we help a lot of people out as we progress through both bull and bear markets. Other thing you guys need to go do immediately is, if you have not, go get our free guide, The 5 Mistakes Holding You Back from Profitable Trading, where I document the 5 most common mistakes I've seen traders make over my years of mentoring and trading, and actionable information to fix those problems. Link down in the description. Grab your free copy of the guide. All right, let us begin. Let's get right into today's analysis. And then we will also be covering kind of the interesting news coming out today. And I'm going to stick this up here real quick. Pardon me. Kind of the interesting news for today is Wall Street firms to take on Binance, Coinbase, and other crypto native exchanges. And gains for XRP. We're going to be revisiting XRP. Is this a rally in the making? What are the market indicators saying? Are we going to see a continued surge in XRP? Is the XRP army going to be vindicated? Is there going to be a resolution to the court case? All this and more as we progress. But first, let's get right into today's analysis. Bam. Okay. Actually, if you guys don't mind, yes. Is this okay? We're going to use this one. Let me know if you guys like this new scene layout. We're going to keep this one going. We are going to keep this one going. I don't know why. Hold on. Let me give it a refresh because I'm not getting the chat. But it does appear as if the stream is getting the chat, which is good. Yes. Okay. Okay, cool. Yeah. I'm just not getting the chat, but you guys are. Awesome. Awesome. Cool. Sorry if I did not see any of the chat prior to, what do we got here? Profit Bear saying, let's get cracking. It's just me. Shout outs to everybody in the chat. Hopefully you're doing fantastic today. But let's break down what we got. We are, of course, going to start off with Bitcoin on the daily, and then we'll move down through the time frames. We'll do Ethereum. We will do XRP. And then we are going to cover the news. And then we're going to get to, I have a mentoring session for everybody today in the Kraken Cryptocurrency Premium Trading Group. So we're going to knock off here in about an hour. And I'm going to go do that private session, that private coaching session. It's just me. There's 7 people in there, brother. There's 7 people watching today. Okay. Daily time frame from Bitcoin. What do we have? This is exactly what I was warning about the other day on Sunday, or actually we were talking about it on Monday. We were talking about this particular price movement where we've had this nice kind of juicy breakout candle, this nice big greenie, but it happened on a Sunday and there was absolutely no follow through on it from the bulls. They were unable to continue to push prices higher. And what I was very cautious of on that day, Monday, is I did not want to see this candle on Monday replace or retreat the entire advance of this candle right here. That would be quite bearish. And it's taken 2 days, but we have now since seen that. We have seen this push, and now price has absolutely been unable to continue or follow along with that momentum. Unfortunately, this is relatively bearish on the daily time frame and does make me believe that it is more probable that we are going to be heading down here at the very least for another negative 10% movement to be testing the boundaries of the daily baseline, and perhaps even to put in a swing like we saw back here in February, where we dive down, trade briefly below the daily baseline, and then rally back above. Keep in mind that would, of course, fit perfectly with the higher time frame structure that we do have here. We don't need these two horizontal rays, which is the head and shoulders pattern forming here on the daily time frame, which a measured movement would be taking us down to 23.4 thousand. So there is that. So this price action that we've seen over the last 3 days does confirm that this Sunday pump was speculative at best and fallacious at worst, and that we just haven't been able to have any follow through. So this is not very bullish in the short term. Okay. So that's what we've got going on for Bitcoin. Of course, big picture wise, we do, of course, have our bear market cycle low down here, which historically we've never traded back down below. So this is now an accumulation zone for the long-term investors. And this is also some price action that is fairly easy to trade if you have a basic understanding of cryptocurrency, or excuse me, Bitcoin's halving cycle. So we've put in our bear market low. We've now rallied. It is unclear whether or not this rally will continue in the short term. Obviously, current price action is not really suggesting that. But of course, we are still above the daily baseline. We do want to maintain that bullish bias. So we will be buying any dips down to and even slightly below the daily baseline, a la this movement right here. But below the daily baseline for sustained periods of time, we'll be hedging our accounts and looking for the short. But until that, we look for the long. We look for continuation up to 35, 37K. So we know several things are going to happen. We know we're going to rally. We know we're going to sell off pretty bad, probably down here to 16, 17, 18,000. And then from there, we begin the bull market. So for the traders out there, for the swing traders, you've got a very clear movement. You're either shorting here, looking for lower prices, and then longing lower prices, looking for the bull run. For me personally, I'm on the sidelines right now for those big swing trades, waiting to see if we are going to get that continued rally. That's why my current trade plan is to be longing dips down to the daily baseline, or again, even slightly below 23.4K, and then reevaluating if we have sustained periods of time below the daily baseline. All right. Do we have any trades on the 4-hour time frame? On the 4-hour time frame, we have chunked back down below the daily baseline. We did get a short signal as of this candle. Now, if you guys are using the qualifying line, then we would not want to be taking this trade. As you guys can see, the qualifying line is simply 1 ATR above and below the baseline, and we typically only want to be taking or entering trades in that zone. That's kind of our way to ensure that we have a good risk to reward ratio for our trade setup. Unfortunately, we didn't get that with this one. We had this a big chunk down. On the very next candle, we got that rising explosion level, but it wasn't until the last 4-hour close that we actually got the trading signal from Minx. So I would not be looking for this trade. I would be looking for a pullback or a pull up, I suppose, if you wanted to, back up to the 4-hour baseline here around 27,539, and then looking for that reversal baseline bounce setup, right? Getting that better risk to reward ratio for my trade setup. So we're just going to be monitoring that and watching for that position. Obviously, yes, we did take a 4-hour long here. That trade was unsuccessful. When we closed below the baseline, that's when we went ahead and let that position go, and that was an unsuccessful trade. Hourly time frame. Nice signals here on the hourly time frame. Again, here's that big chunk down. We crossed below the hourly baseline, and you've got a full trading signal here. All right, so definitely those who are watching could have been taking this hourly short and squeaking out this portion of profit. Let's actually just go back and double check how profitable that would have been at that point in time. We'll use Quadriga, which is our risk management and stop and target indicator. And Quadriga is suggesting targets of 27,099. 26,941 and 26,783 with invalidation at 27,494. So we'll just take that off. And that is the trade setup as it would have been on that candle close. And now we just jump forward in time. We actually are going to exit replay mode. And as you guys can see, we would have hit TP1, TP2, and we're just waiting for TP3 down here at about 26,785. So good, successful hourly, just follow through trade. Just nice classic hourly signal right there. So in summary, the daily time frame is undecided, but my analysis of the price action is bearish. The 4-hour is bearish, but we're looking for price to pull back up a little bit to the 27.5 area to get back in on the short. And on the hourly time frame, we are already in an active short that would have been activated on this very candle right here. Two profit targets so far, and now we're just simply waiting with our hands underneath our seats, as they say in the biz. Hands on the seats. All right. Moving on to Ethereum, and of course, let me know, as always, guys, if there's any questions in the chat about any of the analysis, about any of the price action, about any of the stuff that we're talking to. I know we go through things fairly quickly and we cover a lot of topics, so if you guys are confused or you guys want a little bit of expansion on the topics that we're talking about, just let me know. Shout outs, Profit Bear, good to see you, my brother. Where's my lucky 7? We've got SC in the chat. Have we heard the new meme coin is the Jesus coin? I didn't know that, but you know, praise Jeebus. What's going on, Jordan Stotts? That would be a fairly easy meme coin to pump, right? Like, you know, like just get all the Christians to buy it, right? Like, hey man, do you like Jesus? Buy this coin. It's going to the moon. Okay, cool. I can get behind that. I can get behind that. All right, Ethereum on the daily time frame, again, very similar to what we just saw with Bitcoin. Ethereum is showcasing perhaps a very perfect example of what happens when you get no follow through on a breakout candle like this and how it often leads to continued bearishness. So here we see something very similar to what Bitcoin is showing us right now. We have this big Jericho candle. It's not a Jericho candle, but we have this nice big greenie on a Friday. And immediately come Saturday, we sell all the way back off. All right. Not a bearish engulfing candle, but this is a harami, a little bit more than a harami. And then that bearishness continues, right? Swing failure pattern continues. So overall, again, the daily for Ethereum is not looking great. Per our strategy, we are, of course, on top of the daily baseline. So we are biased to the long side. So our trade setups right now, we're looking for pullbacks down about 10% down on Ethereum, down to the daily baseline, and then looking to take those swings to the upside here. All right. Other than that, nothing super significant coming in here for Ethereum. 4-hour time frame. Very similar setup here. Here we go. We are breaking down below the daily baseline, or the 4-hour baseline, excuse me, right here. Here was the actual close below. And now we've got a little bit of a wiffle waffle reversal. We're just kind of flirting here in the scope of the daily baseline. Notice that Minx has not crossed below 0. We also don't have a rising explosion level from Wadatar explosion. So there's no reason to be taking a trade or taking a position right now. We need both of those factors to be happening in addition to what we're seeing from our baseline. So nothing here so far. In fact, some cheeky people might even be longing this as a reversal baseline bounce, which I am totally fine with. It's not the trade setup that I currently have right now. Down to the hourly on Ethereum. Now, the hourly on Ethereum, this is a reversal baseline bounce setup, especially with Ethereum being so oversold. So this is actually something that I had skipped. So this will be the trade that I am going to be taking right now. So give me one quick second so that I can, there we go, sorry. Couldn't see which tab we were looking for here, but okay. We are going to be doing ETH. And let's get our metrics here. Okay, pretty clear here. There we go. And then just give me one moment while I post this signal. All right, so we got that active. We're going to see how that plays out in real time here on Ethereum. So again, just seeing this reversal baseline bounce setup. And that's pretty much, all there is to it. This is what trading with a strategy looks like. You see a setup, you identify your risk management, and you take the trade. And that's it. And you just continue to take those trades over and over and over again. And you understand that now that I'm in this trade, there is no amount of analysis or whining or modification that is going to make this trade more or less successful for me. The more you start messing with the trade, the more likely it is that you're going to do something wrong, stupid, and inconsistent. And you start introducing all of these inconsistencies and all these bad habits into your trading. So don't do that. Develop your strategy. Do the work in the back testing prior to getting into the trade. Develop the system, back test the strategy, understand what your edges are, and then execute. When it's time to trade, you're a robot. You're executing. You're not questioning. You're not analyzing. You see a trade setup and you take it. And it could win or lose. Doesn't matter. If we lose, we're going to lose 2% of our account here. If we win, we're going to win 4% of our account. That's it, right? So that's a 2-to-1 risk to reward ratio. We're just targeting for TP3 here. So this is a 3x ATR projection from current price. This is a 1.5x ATR projection. Now, my position size is based off this distance from entry price to stop loss on a 2% risk. So that means if price goes from here to here and hits my stop loss, I will lose 2% of my account. However, since this distance is twice as much as this distance, the distance from entry to TP3, if I gain that, if that happens, I will make a 4% increase on my account. So we are looking to trade this strategy with a greater than 55% hit rate. All right. I know that sounds low. That is slightly better than a coin toss. But if we have a 2-to-1 risk to reward system, all right, meaning when we win twice as much as we lose. And if we win 55% of the time or greater, we are going to make money, right? About half your trades are going to be losers. But at the end of the day, at the end of the month, at the end of the week, you're going to be making money. Okay. And this just eliminates all of this. Oh, should I mess with the trade? Should I go for this strategy? What's hot right now? No. Identify your market, get good at your market, develop a strategy, and then just execute. And then at that point, once you have all the metrics, once you have all the numbers, it's just doing it. And then it's just scaling it out, right? So at the end of a month, you've got your stats, you're trading at 57% or 65% or even greater if you've got a good strategy, you've worked really hard on it, and you're making, I don't know, $5,000 at, when it's all said and done, right? That's your P&L from all your winners and all your losers combined. It's $5,000. Okay, well, you want to be making $20,000. All right, you just need to quadruple your trading account. How can you do that? I don't know. Work more hours at work, pick up a side hustle, sell something that you don't need. But once you have that consistent data and results, it's just about scale. It is just about scale. Shout outs to Alex, Profit Bear. We've got B-Flow and Starman Jack in the chat. Starman Jack, I am curious about what you think about BTT. Fundamentally, I'm not a big fan of BTT. It's got a pretty low rating score based on its decentralization and market strength. But since we're supposed to look at XRP, but let's just look at BTT USDT here real quick for Jack. Shout outs to you, my friend Jack. Hopefully everything's doing well down there in Aussie, my friend. And we'll look at the liquidity on OKX. Should be relatively okay and liquid to look at this on OKX. Let's start off with the weekly without the baseline, of course. Yeah, I mean, like what can you say, right? Like, what can you say about BTT, right? This thing launched, did good, and I'm not sure what this gap down is, but that is atrocious. Is this true across Poloniex? What happened here? Did they have a stock split? What? They have a stock split? What is going on here? This is not how crypto works. Like, what is this? I have never seen anything like this in my life. Yeah, it's token split, right? Wow. Okay. Yeah, they say that all Justin Sun projects pump if you're Justin Sun, right? You know what I mean? But if you're not Justin Sun, look out. Wow. All right. Anyways, we will just is Leica says yes, it was. Okay, that's why I asked. So is Leica is saying there was a token split. Let's see. Let's see what information. Thank you very much, Alex. I appreciate that. Let's look this up. Yeah, details of BTT token splitting and smart contract swap. According to the official announcements of the team, the token split on December 6th, 2021. CoinEx will swap the old BTT tokens with the new BTT tokens at a ratio of 1 to 1,000. All right. Okay, so they essentially just massively increased the supply, and they just replaced tokens. Okay, interesting. BTT and BTT USDC. All right, cool. So for reasons they decided to do a token swap. You theoretically would have had the same amount but more, but I doubt that's how it actually played out. I'm sure that the fear and panic also caused the sell-off, right? So again, you can see they had the token split, and initially, just like all cryptocurrencies, right? Like on day one of trading, everything starts out good, like nice big pump, right? And then sell off. And then, ideal, 60% pump actually, sell off. And then, now we're just kind of looking for what all cryptocurrency investors are looking for, which is, all right, this is accumulation. Like, when's the pump? Like, let's go. This is kind of interesting. I do feel like BTT would be a prime target for a token to pump, especially for Justin Sun. And this is interesting here. So usually when we're seeing like small cap tokens like this, and we start to see them in this kind of distribution pattern, this is when a contrarian investor, and this is not really my strategy, but this is when a contrarian investor might begin looking at these assets, because you could relatively infer that they are bottomed out, therefore juicy, therefore we're going to get a big movement off of them, like, 2x, 3x, 5x when they actually do their thing. And I mean, prices are really cheap on BTT. And this is pretty interesting. We're actually seeing this print right here, this 50% pump in just a day. And usually when we see this, usually we see it a few times. This is called pre-accumulation, where we've got, because they're not subtle about it. You'd think they'd be subtle about it, but they're not. This is when whales step in and they just make a big buy and they accumulate the token at cheap prices. You can see that liquidity moved the market up 50%, which immediately was regulated back down. And these are Alex, you got to be salivating looking at this thing, man. Yeah. Look at the pre-accumulation. Oh, yeah. Like this. This is the assets we like. Now, there is a level of analysis that we can, of course, perform on this with Sentiment. Sentiment is very helpful for looking at this data. And what we can actually do is pull up the BitTorrent token. And we want to look at we want to look up the price. So we're going to make a new chart here. So we've got the price of BTT. We want like network activity. We want to see, let's see here. Interesting. Development. Well, we don't really have much to go for here. No. We can, of course, look at volume. So usually with Sentiment, we can look at a lot of on-chain data, right? Like network activity and the such. But in this particular case, we really are only getting access to price and volume from Sentiment, which is unfortunate. Yeah, so obviously there's kind of that 50% pump right there. It just occurred last month. And look at that big volume print, right? So that was a very large amount of volume that came into BTT. And given the fact, again, that, we got a very nice, like, multiple ways to view this, right? So again, we can just draw this resistance level out, okay? And we can now see if we'll form something like a descending triangle rather than a descending channel. Would be nice to see. Let's see here. There's our channel or wedge, right? Falling wedge at the bottom of the market. And this is cool. We just watch for breakout, right? So we can just set this nice alert right here, which I'm actually going to do. And we're going to once per bar close that way. Play sound. Show pop-up, send email. There we go. That way I'll be notified and I won't forget when this does its thing. Yeah, because we have to fundamentally believe that this is, Justin Sun's a big influencer in this space. Of course, he has a large holding of BTT. He wants to see this go up. And just, identifying these really exhausted coins when they're at the bottom ends of their accumulation cycle can often be very profitable. So, Justin will probably pump this. So I hope so. Yeah, China and Hong Kong are moving back into crypto this month. Yeah, and exactly. Justin Sun's pretty well connected. Board member Wobie. Yeah. All right, let's get the kombucha going, guys. Smash the like button for the kombucha, all right? Island mango. Okay. So BTT, relatively interesting. Let's look into... Might as well look at TRX too. I'm all right. I don't want to do that to myself. Let's... we need to make a new watch list, which is probably moonshots. All right. And we will add BTT to this list. All right. I like that. This is okay. I am okay with this. So we are going to look to buy that per weekly. All right. Let's get to XRP. We've been tracking and monitoring XRP. Because XRP has been doing like really decent, right? What's this? We got a data issue, delayed streaming. The issue is on the exchange side. Come on, Kraken, you got to get your stuff together, man. This is just unacceptable. So I want to make sure that we've got current data. We're currently at 51.77. Is that influencing? What's XRP USDT at on Binance? Okay, good. Seems like our data stream is completely fine. We're just getting that warning there that we do have a slowdown. Hey, Raw Laws, how you doing over there? Thanks for watching us on Twitch, my friend. And let's talk about XRP. So obviously, we actually have quite a bit to talk about with regards to XRP. Give me just a second. Okay. So yeah, here's the notable things about XRP, right? So the cryptocurrency, XRP, has been showing some pretty promising signs of a potential bull run, according to pundits. We, of course, have price just in this last week up about 24%, and it is decoupled, as we can see, from the rest of the crypto market, which a month over month is in the red, right? Almost entirely. So we have XRP decoupling, all right? And this uptrend is, of course, XRP to the moon, maybe. This uptrend is backed by a surge. We've had a big surge in trading volume and an increase in XRP's MVRV ratio, okay? Which is just, an indication that the trend might repeat itself. Now, XRP's network activity is also interesting. There have been notable spikes in daily active addresses interacting on the network. The last time we saw a similar print led to a 45% rally in XRP's price. Sentiment around XRP is, of course, also improving on the social spectrum. There's been increased confidence in all the polls, increased confidence on Twitter about the token's, sentiment and social volume. So we've seen spikes in all these metrics, and I'm utilizing sentiment for that information. Now, let's see here. So it's kind of interesting to see XRP, the 6th largest cryptocurrency by market capitalization, doing this kind of decoupling project. And, so very similar to what we saw kind of with we were just looking at the BTT chart. One could argue, and this is a little bit higher, right? But we had this long accumulation period right here that was kind of punctuated by this drastic sell-off back all the way back down to the lows in March of 2020. This was the March meltdown, right? So hit XRP probably the hardest of all cryptocurrencies, right? 63% down, whereas with Bitcoin it was only, I think, 18% down totally on the daily. I could be wrong. But that led obviously to the tremendous run of 2021. And unlike the other cryptocurrencies, it's just been down only. And XRP hasn't had that big run in 2023 that we've seen from other cryptocurrencies. I mean, again, it appreciated 80%, but back all the way down to the bottom, back up again 80%. Bitcoin and none of the other cryptocurrencies have done anything like this, So XRP is interesting here. But I think we have this kind of nice accumulation period right here. Obviously monitoring for breakouts above 56 cents, monitoring for breakouts below 34 cents. But we've done this before, right? We've done this before. Just the EV, the risk to reward ratio, entering a position here and price going to its all-time high is an 8-to-1 return versus going to its all-time low. All All right. And of course, you guys know, we'll see if it does it again. Yeah. If we ask TradingView to plot where our stop loss should be, it says nowhere, no stop loss, full send on XRP. But let's look at our weekly information here in data. Yeah. So weekly time frame, we did have a bearish trend with all of our moving averages tracking down below our slower moving averages. But now everything is really consolidated and come together. And we have this, again, just kind of this wider accumulation period, this consolidation period. I think obviously the movement here, if we start tracking up here significantly on XRP, then we're going to have some pretty bullish signs, right? Like trading above the 200 simple moving average. And historically, guys, when something trades below the 200 weekly simple moving average is the perfect time to be making allocations to that asset. We haven't seen, right? We've seen an increase in volume here, and we haven't seen that big volume spike to kind of kick off the bull run yet. So, I mean, really your options are, right? Like lower, we're going to throw the log scale on, is assuming that XRP's price is going to be lower and trying to accumulate at lower prices, or just monitoring and watching for this breakout very closely. So I definitely think that's the play here. That's the move. Full disclosure, I have added XRP to my portfolio as of Monday. Yeah, I do know that the bottom line of the chat isn't readable. I did mean to fix that. I guess that I did not. Let's see. How can we fix that? Well, I think we... Okay. Let's move it up right there. And then I think that fixes it, right? I don't really like the way that looks because no. There we go. Live chat backdrop. I take this all the way up like this. That looks okay, right? No, I want it distinctly below that. Give me 1 second here, guys. Thank you. What's about 375? There we go. Now we can bring that down and boom. Easy peasy. Lemon squeezy. Okay, better. There we go. Seems like there should be like newer chat in there, right? Upside down, head and shoulder. Oh, okay. No. That is the latest message. Yeah. Daily time frames looking pretty good. We've already achieved escape velocity on most of our metrics, and now we're actually in a bit of an overbought area on the daily time frame. Okay. So I could see a price pullback here on the daily time frame, coming back down to test this Kumo cloud that we just kind of broke out of prior to continued momentum. Yeah, so we should be able to see. Yeah, okay, well, maybe not, right? We did just achieve a little bit of escape velocity. We're trading above the Bollinger Bands here, so this is kind of the reversal trader's dream. We're not quite overbought yet. We're just starting to show warning signs of getting a little overheated after that big volume spike right here. So definitely cause for concern here, but nothing too crazy. Okay, let's get into today's article of conversation. There we go. And we're going to be discussing this. Wall Street firms to take on Binance, Coinbase, and other crypto native exchanges. So this article is fairly interesting. This is brought to us by Crypto Slate. So here we're discussing how traditional Wall Street firms are making strides or more significant strides to compete with established cryptocurrency exchanges like Binance, like Coinbase. Now, I would say that this is a pretty notable shift in the financial industry sector, as these institutions are clearly beginning to recognize the growing influence and potential of cryptocurrencies. All right. And we're not just talking any financial institutions. We're talking Fidelity Investments, JP Morgan Chase, Goldman Sachs. These guys are actively exploring opportunities in the cryptocurrency markets, right? These guys want to leverage their existing infrastructure, their understanding of regulatory compliance, and of course, their deep pockets to attract both institutional and retail investors to their platform. So we're going to be seeing, and this actually might be good, right? This actually might be good. The ability to, I mean, this is going to really open the doors wide for more Americans to safely and confidently engage in the cryptocurrency markets, right? I think this is going to be more volume, more liquidity, more retail traders getting their savings accounts robbed, all of the things, right? And obviously this challenges the dominance of centralized exchanges, crypto native exchanges, who are already in the cryptocurrency space, who hold such power over the cryptocurrency space. All right. So I think for your retail investor, for your retail trader, there could be quite a lot of positives about this, obviously, some advantages. So love them or hate them, these firms have more experience in navigating, geopolitical situations, navigating kind of big, big catastrophes. Many have survived financial crises and all that, as opposed to cryptocurrency exchanges, right? Which most of them have been around for less than 10 years. And, again, love them or hate them, but they have employees, they have experience with risk management and providing a greater range of financial services. And again, one that you now can have probably a little bit more trust in, right? There's a difference between proof of reserves and like FDIC insurance and all of these things. So, although I do think that cryptocurrency exchanges have certainly improved over the years, there's just a level of professionalism, compliance, and security when you're on something like Charles Schwab, right? As opposed to like Hotbit, right? So there's quite a big difference, I think, there. And, again, the other thing too is that this can help bridge the gap between traditional finance and the world of cryptocurrency, right? Which can help the big goal that we've been talking about for years, which is mainstream adoption, more people using cryptocurrency, more people being comfortable with cryptocurrency, more people buying cryptocurrency. So this could, the more that we see the Charles Schwabs, the JP Morgan Chases branch out into their own crypto exchanges, their own crypto custody services, all of these things, we are going to be seeing an influx of capital into the cryptocurrency market. So the idea that there's not going to be another bull run, the idea that cryptocurrencies are dead, I think is completely fallacious. It's the old, kind of, what's the word I'm looking for, right? Magician's trick, right? It's a big magician's trick. Yeah. Getting bailed out builds character. B-Flow, everybody knows that, right? Now, on the other hand, I guess the debate is just going to be simply this, like, in whom do we trust? The original ethos of cryptocurrency, kind of the underlying ethos of Bitcoin, certainly is verify, don't trust, and to be your own bank, to take control of your own money. And so the argument often is, it's this kind of bifurcation argument. Now that we've kind of gone over this, I'm going to go to just chatting, if you guys don't mind, so we can talk about this. There's this, the argument is always bifurcated, right? You're either for decentralization or you're for centralization. And I think that is the wrong way to consider things. I think that's the wrong way to think about things. And certainly my thinking on this has evolved over the years. So let's just take this example. So on one hand, one could argue that with the introduction of DeFi, we're already somewhat in the process of retraining the crypto community's brains to utilize decentralized protocols and to do more self-custody as opposed to more centralized exchange trusting. And of course, this couldn't be highlighted any more than with the collapse of FTX, where so many people just lost everything because it was deposited at FTX and it's just gone. So on one side of the argument, we have pro-decentralization. We don't want to trust anybody. We want to fully decentralize everything because not only will that be a better and more secure user experience, but it also allows us to begin moving forward with the larger aspirational goals of cryptocurrency and blockchain technology in the first place, which is decentralizing finance, providing more power to the people, banking the unbanked, all of these things, getting the power, or at least wrestling a good chunk of that power back from these centralized, powerful, central points of failure and authority that, because they have all of this power and authority, can attempt to dictate rules that are often not in the best interests of the body populace. But when the money is decentralized, these individuals, these institutions have lost a significant amount of their power and therefore cannot be as influential as they would like to be in the shaping of human behavior and decision making. But here is the thing. I think that it is a very hard sell to get people from fully traditional finance to go all the way over to, yes, I hold my own keys on my ledger around my neck. It's very hard to do, right? Younger generations, yes, but not everybody is just younger generation. There's just a lot of people that are older that have grown up this way with these trust and faith in these institutions, as misplaced as it might be. And so the argument that I've heard is like, well, this is just terrible for cryptocurrency and decentralization if we get JP Morgan Chase, Charles Schwab, all of these people running there. We're just replacing one bad actor with another bad actor. But I don't think it's the case. I think that you're forgetting. I think that idea forgets that you cannot change the fundamental characteristics of cryptocurrency the way that they're laid out, the way that we've achieved consensus. Like Bitcoin still is a decentralized network. And even if you deposit your Bitcoin into a centralized exchange and now it's casino money just on the centralized exchanges server, you still have the ability to opt out from the system, to withdraw your crypto off into your own wallet and do what you want. But first, getting that crypto into people's hands is the first step. The more individuals that we can get cryptocurrency into their hands, utilizing it, even if it's, on with their local bank, even if it's with their regular financial institution, even if they're not able to do all the cool DeFi stuff or this or that, or they could lose it if the company goes under because they don't, not your keys, not your coins. It's still a step forward in getting more crypto into more hands. And the more curious will then be able to move forward with that. And I think overall, in the long run, this is a huge benefit for decentralization and the ethos of cryptocurrency, and a huge win, right? A huge win. Because, no longer are we knocking at the door asking to be let in. No. Now they're coming to us asking how they can be a part of our party. That's how it's going. We're not asking to be let in anymore. They're asking, how can we let them in? So that's my take on centralized institutions that we associate with traditional finance achieving positions of power in cryptocurrency. I think it's great. Obviously, there's going to be bad things that will follow through from that, things that we need to be aware of and cautious about. But in general, I think it's great because it gets more crypto in more people's hands. And once you get the crypto in their hands, it's very hard to stop what comes next, right? More crypto in more people's hands is going to lead to more network use, more decentralization, more people using and advocating for cryptocurrency, and more solutions to, I think, the problems that we have in our day-to-day lives. So yeah, I'm all for it. I think this is great. And it's a big W. All right. Oh, what do we got from the rest of the market, right? On the monthly, just about everything continues to slide down, all right, except for Kava, which has had some nice gains. XRP obviously up 10% on the month. BGB, RNDR, Tron, and BIT, which is a Bybit's token, doing okay, Pepe. Up a measly 4.5% on the month. Wow. That is rough. The week has not been too bad. Again, we've had some nice pumps over the last few days on some assets, but in general, most are just giving back their monthly gains. And interestingly enough, we can actually see that overall, the majority of tokens in the top 100 for the entire year have not done too well. There have been small winners like GMX, Ripple, and Injective. AGIX, which is a Singularity Net, which is an AI token. Conflux, which is, I believe, another AI token. And Render token, which is kind of another stable diffusion imaging processing thing. Interesting to see Trust Wallet token up 60%. So when pump, if we have a win. Well, hopefully like right now, especially because we just went long on Ethereum. Yep, so this is just all we're watching right now. Pump the likes for the kombucha sip. There we go, guys. Brew Doctor. Brew Doctor. Apparently, I can make Hearts app. Apparently, I can make hearts appear on my screen. Yeah, you certainly can, man. All right. All right, so in YouTube, I am starting the Q&A. So if you guys have any questions, go ahead, feel free to submit them in the live chat. I'm now doing the live Q&A session. I did see that Crypto Rick was asking, what are your thoughts on Joe? Joe's relatively cool. I know that there have been a lot of strategies that I've seen about farming and whatnot with Joe. This is going to be Trader Joe's token. Trader Joe being the largest decentralized exchange on the Avalanche platform, or the Avalanche blockchain. Let's go see overall what the price of Joe is doing. Joe is, of course, listed on Binance. And so let's take things out from the weekly perspective. Yeah, so Joe is relatively interesting. Since launch, at least listing on Binance, we've had this sell-off down to this pretty long level of accumulation. And it's very important that we look at volume down here. Yeah, just very low volume. And then this, again, this might be what we've seen before, which is this kind of that pre-accumulation or that accumulation pumping, right? Where there's just a lot of buying prior, or even potentially the beginning of a nice trend here. And of course, this is the weekly time frame, so we've got quite a bit, but we have established pretty firm support down here in the 13 to 14 cent range. And we are just now attempting to overcome resistance in the 75 cent range, I would say. Right? This was previous support that we tested multiple times. We broke down below that and we're unable to rally back towards it. And of course, the first opportunity that we get, we start that sell-off. All right. Now we're in the middle of the range. I think that what's most likely here is something like either a swing failure pattern. So we move up another 30 to 50% here. But we're unable to actually make these highs, and then we come back down here for another test of the lows before a full send later on in the year. Yeah, I don't think that Joe is going to break out now. But Joe is looking decent. All right. Joe's looking decent. This movement off the bottom, relatively low. Remember, guys, crypto bull markets are very forgiving and very unlike anything else, right? A rising tide lifts all boats, and the strength at which Ethereum, Bitcoin, and all the other majors pump typically tends to buoy everything up along with it. It's just the hype train, everything gets involved. So at some point, it becomes less a matter of picking the correct assets and more just a matter of distributing your risk properly, right? And that's a fine line to walk. You want to have a diversified portfolio. You also can't have your eggs in so many baskets that it's impossible to keep track of, because even though we're going to see rises in just about all tokens, not all pumps are the same. Some, like the majors, will pump strong and sustained throughout the majority of the bull run. Others will just have, like pump and then they'll be done, right? They'll pump and then they'll be done. So, you have to find a nice balance in your investment strategy for those. Daily time frame. What do we see here for trades, guys? Do we see trades? We do not see trades. In fact, this would have probably been a losing trade here, right? We've got consolidation, a run up to the baseline, a pushback, and then an attempt to trade over the daily baseline, and a rejection immediately, right? Rejection immediately. And unfortunately, we just had all the signals that we would want to be taking a long trade on this candle, looking for continued bullishness, but that was not the case. That was not the case. So again, I'm biased to the upside here on Joe, right? So we've got a swing and a miss here. This trade's probably still open though. If you would have taken this long, and now you've even got a slightly better price. Well, significantly better price, actually. No, that trade would have been a loser. So technically I already lost that trade. I would just be waiting for price to regain this daily baseline, 44 cents. Start pushing up with some nice momentum over this resistance level and going for another run back up at these highs at 66 cents. I don't think we make a new all-time high. I don't think we make a yearly high, though. I think this is lower high and then lower. And then full send later on in the year if Joe is going to be buoyed like the other cryptocurrencies. 4-hour time frame. There is no trade here. This is pushing above the baseline. We are positive on Minx, but nothing coming out of Wada Atar. And in fact, Parallax is bearish. So nothing for Joe on the 4-hour, and on the hourly we're flat too. All right. Big long sell off here, push back above the baseline here. But Minx is still negative, and we're not getting any positive alpha or delta, or rising explosion level here from Wada. So nothing. No trades. Positional trades. Again, I think we're a decent spot for Joe. I think you'll have an opportunity to purchase lower down here, back toward closer to 20 cents, and I think that would be the moment of opportunity. Of course, you could also just wait for that 75 cent breakout. But then again, this movement from 20 to 75 cents is also very juicy in and of itself. So I would keep that in mind. Which trade do you want? Do you want this trade or do you want this trade, right? This trade's actually juicier, right? From here to here is 330%, whereas a breakout trade is, even if it went back to current, even if it went up here, is 268. So so big difference in risk reward there. Trader Alex is saying Trader Joe is releasing a new AMM tool. Give me one sec, my friend. Why? Trader Joe goes all in on auto pools. Game changer for DeFi investors. Let's see here. How fast can you guys read? Okay, so this is pretty interesting, right? So what we've got here, we've got obviously Trader Joe. It's a DEX. It says here Binance Smart Chain. It gained prominence on Avalanche. It's Avalanche's primary one. It is, of course, on BSC, but I digress. But they're introducing a new feature called auto pools, and this will allow you essentially, if you're a yield farmer, to do a set and forget yield farming strategy for liquidity providers. And that kind of eliminates the need for position management, which is position management is everything in trading. You got to know where your chips are at all times. So with these auto pools, liquidity providers are going to be able to provide liquidity to multiple assets through what they're calling liquidity books. And these are strategies built and hosted off chain by the Trader Joe team themselves. So it'll be interesting to see if they're going to introduce like custom user strategies or anything like that, but probably not. So this combination of liquidity book and auto pool is designed to attract more liquidity to the protocol, capitalizing on untapped areas in the DeFi market. And ideally, they want to outperform other emerging decentralized exchanges. So the first auto pool to general, according to this article, is supposed to be launching soon. I wonder if it's actually launched. And it's going to automatically rebalance and auto compound all associated fees and rewards. So if you're staking Joe, you'll also earn protocol revenue with an APR of about 22.7%. That's an APR of 22.7%. And due to this, the staked Joe token increased by 2x in just 1 week. So pretty strong bullish sentiment toward there. I also, so that as this article was talking, DeFi researcher Tim Dorr over on the Twitter suggested that the auto pools have the potential to revolutionize the DeFi market because it's a one-click yield farming and zero slippage trading. All right. But the downside, of course, is the fact that these strategies are being hosted off chain in a black box, unable to be verified and audited. So, all right. We also have a strategic collaboration between Trader Joe and Woo Network. So they want to strengthen liquidity of the Woo token on Arbitrum and expedite growth toward a unified omni-chain future. So this will allow Woo traders and liquidity providers to trade and earn Woo on Joe's decentralized exchange through the liquidity book system. Let's see here. There's going to be, and they're doing incentives for the Woo WETH, their Woo ETH LP pool on Trader Joe. So pretty neat. The ability to just, have all your, just everything taken care for of you, right? You just one click, everything. And Alexander says that Woo is just got listed on Binance, which is, of course, interesting. So let's go see if there's some of these pumps left to gain. Doesn't look like Woo is actually pumped that much. It is listed on Binance. But yeah, Woo has not seen that kind of same movement. We have not seen that same growth out of Woo that we had with Joe. All right. Little pump, 67% pump, and kind of dipping back down. And then just one last thing that we're going to look at, and then, oh shoot, sorry guys. Profit Bear, I apologize. I've got to get to today's daily mentoring, daily coaching session with the premium members. So I've got a jet. I lost track of the time, but hop on with me tomorrow and we will take a look at that Jesus coin. All right, guys. I apologize. I do have to leave in a bit of a rush, but I want to thank all of you for joining me on today's Breaking Bitcoin Market Update. You've been a great audience. Thank you for all the great questions, all the support you guys continue to show. Make sure to smash the like button like it owes you 6 Satoshis. It does really help us get the word out there, but nothing helps more than you guys sharing the link to this video to those who you think would like to improve their trading strategy, their trading skill. All of that really helps us out. Don't forget to subscribe so you never miss a episode. We will be back tomorrow, same crypto time, same crypto network. If you haven't already, make sure to go download my free guide, The 5 Mistakes Holding You Back from Profitable Trading. If you're struggling with achieving the profits that you want with your own trading strategy, or if you don't have a trading strategy, it is the perfect free e-guide for you to start and supercharge your trading with today. And we will be back tomorrow, guys. Until tomorrow, trade safely, practice risk management, make sure to tip your waitresses, and be good to everybody. I'll see you guys. Cheers. Sorry to leave so fast.